The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
A construction equipment company and a major oil company, both showing signs of growth and income. And the editor of our Income Investor Service here, Brian Hamilton, is going to tell us why. Fill in all those blanks for us.
Oh, there's a ton of factors for both of these companies.
Knowing you, I'm sure you've got a long list here. Let's start with Caterpillar.
Yeah, well, Caterpillar in October reported June to September earnings where they beat the Zacks consensus earning and revenue estimates for the third consecutive quarter. Now, what's been a really big driver as late is the company has reported October retail sales and November retail sales, and they saw increase in overall sales in all four of their major categories, and it wasn't just concentrated to one country. This was a worldwide growth. Positive economic news out of both Europe and Asia have been really big drivers, but they've also seen big growth out of Africa and the Middle East as well. I want to show you in this first slide, some of the specific numbers we have here. Just in the October numbers, okay, machine sales were up 19%, resource 18%, construction 20%, energy and transportation up 23%. Now, while these were great numbers, November's were even better. November came up with machine up 26%, resource 35%, construction up 25%, and energy and transportation up 23%. Now, as one would expect, given all these positive news, you had a really strong beat on the earnings and then positive sales going forward, and we have a really strong global economic recovery. Analyst estimates have jumped up, as we see here in the detailed estimate page, each time. So we have earnings, and then we have the October, and then we have November, and then we have higher expectations. We have increases for the next 2 quarters and the next 2 years. We have seen these really solid price increases for estimates going forward for the company. We also, given all this great news, as one would expect, we saw the price has just been skyrocketing as of late.
Yeah, it reached an all-time high recently.
Yes,
right?
It has, but it's actually showing no signs of slowing down whatsoever. And because we still have what's most important here is increase in annual estimates, which gives us a really solid growth picture. Now, management was recently asked because they have a ton of cash on hand. What are you going to do with this cash? And they said they're looking at 3 major areas. First, research and development. They're looking to make their products more fuel efficient to match up with some of these emission requirements around the globe. They're also looking to improve their built-on products. And you have like a bulldozer, well, you have so many different attachments on there. Right. So they're innovating on these new attachments as well. But most importantly for growth and income investors, they're looking at increasing their dividend, and they're looking at a share repurchase program. Yeah. And so that's music to growth and income investor ears. The company currently pays a 1.87% annual dividend. Now, all this great news is before President Trump's announcing his infrastructure plan, which is going to be hundreds of billions of dollars over the next 10 years. Now, we're supposed to hear that in about the next 2 weeks. Yeah. So that would be a really solid growth driver over the next decade for the company. So we have potential of a dividend increase, share repurchase, global growth, and we have the company investing wisely in R&D. And again, we're looking at a decent right now 1.87% annual dividend. So the long-term look on Caterpillar is really another one of the reasons why the price of the stock is just going through the roof.
Yeah, all good. Okay.
Oh, yeah.
So Chevron is another company you've identified. It's one of the largest publicly traded oil and gas companies.
Oh, Chevron's massive. Just like Caterpillar, they beat the Zacks consensus earnings and revenue estimates for the past 3 consecutive quarters. But the real big story for Chevron, as one would expect, is the price of oil. Oil broke $63 a barrel recently, and that was the highest it's been over in 3.5 years. The company has also seen some really positive news, both the EIA and the President. And I want to show you, a couple little quick highlights on here. The Energy Information Administration, the EIA, increased price expectations per barrel for both West Texas Intermediate and Brent crude. Now, this was above what they already increased their estimates for in December. So it's 2 back-to-back month increases, West Texas up 4.8 and Brent crude up another 4.3. Now, the EIA also reported that the U.S. domestically is expected now to produce 10.27 million barrels per day in 2018. This is up from their increased estimate in December of 10.1 million barrels per day. Now, this would be the highest level of domestic output ever recorded by the EIA since they started recording in 1983. Now, the other big driver are President Trump's oil initiatives. In the tax law, there was a provision in there to open up the Anwar area in Alaska for exploration and drilling, and Chevron has been trying to get in there for years. The president also recently announced that he's opening up both the Pacific and Atlantic for offshore oil well drilling. Now, the Department of Interior is expected to auction off about 47 new parcels in the near term, so it's another nice growth driver for the company. Chevron pays a solid 3.36 annual dividend. But there's also a report in the Wall Street Journal today, January 11th, that a lot of traders are looking at oil potentially hitting $80 a barrel by the end of the year. Now, this is given, just like it's helping Caterpillars, we have global growth, and while you have global growth, the demand for oil increases. So we have increase in world demand, and we also have OPEC kind of trying to constrain their overall production. So that's the combination of that is expected to continue to have push the price of barrel up throughout 2018. So we have domestic and international growth stories for Chevron and oil industry overall, and the potential of oil hitting $80 a barrel and a really solid 3.36% annual dividend. So all really good deals for those guys going forward.
A lot of dynamics at work on that one, too.
Oh, yeah.
Do you own either of these?
No, I do not, but I have Caterpillar in the income investor portfolio.
All right. Well, thanks for all of that information. Don't forget, you can see other stock articles written by Brian here on our website, Zacks.com, as well as get other types of stock information there as well. All you need to do is get over to the homepage. With Brian, I'm Terry Ruffalo.